So happy vaccine day, everybody. This is the weekly movements for the week ending 18th of February 2021. So getting straight into it. This week, number of net ceased advisors 26, switched 13 and new of 3, leaving a net loss of 23 and a year to date of 149 advisors. Still relatively low when compared to the prior year. Shout out to the switches. So Vince going from Century Group to Maven Capital, Nathan White from Findex to Sterling Financial, and Debbie from Australian Unity to Cobalt Advisors. Congratulations, everyone. Biggest gains for the week. So a couple of new licenses on here. Premium Advisory 2, Hester a gain of 2, still down from their highs of 38 in December 2018. Alliance Wealth now sitting at 190 under the Centrepoint Alliance brand. The largest license in Australia, which is the SMSF Advisor Network, licensing mostly accountants, sitting at 832. In Focus, a gain of 2. And for Chennai, I hope I've pronounced that correctly, a new license there of 3 advisors. Biggest losses for the week. So PIS, a net loss of 2. That again is under the Centrepoint Alliance brand, so losing that from their direct brand there. Bedford Chartered Accountants now closing all their advisors, or I should say limited license advisors, accountants. So their license now sitting at 0. No doubt closing that license. Synchron, a loss of 3, flat from 2 years ago. Lonsdale, a loss of 4. GWM, again, announcing that it's the MLC owned GWM, IWF owned, a net loss of 4, now sitting at 382. And Aware Super, losing 5 advisors there. So quote of the week actually goes to Senator Hume this week, and I know this caused some consternation in the market, or pros and cons around the early access to super regime, but I actually do think there's obviously some merit in the early access to super regime, and there has been a significant uptick in Australians interested in super. And that is exactly what Jane's saying here. The early access to super scheme demonstrated a welcome indication that Australians are becoming more engaged with super and retirement planning. We just completed a consumer survey as part of our landscape report, and it shows across all age brackets that Australians are far more engaged with their superannuation, which can only be a good thing. It's also seen an increase in engagement in accessing or wanting to access financial advice and or an accountant over the next 12 to 24 months. So I think generally the early access to super regime has increased, obviously, consideration around financial advice, which ultimately will help everyone in the industry, but also ultimately will help consumers if they can access affordable advice, which is actually something else that we'll address in the near future. Well, that's it from me for the week. As I mentioned always, please, if you haven't claimed your profile, go on to advisorratings.com.au. See you again next week.